All right, guys, I want to do a video on a special topic I think is very important, and that's, the temptation to identify as either a bear or a bull, to feel bearish or bullish, or to, express that type of belief. Now, if you're interacting with any market, especially in a social setting, you may have noticed that, if, whether on YouTube, Twitter, Discord, people tend to segregate themselves into these different camps, right? They tend to either be a bear or a bull, and they create these different gangs where they make friends in the gang, and it's just a gang mentality. Uh, and the point of this video is to kind of identify that's not helpful, right? And it's directly contrary to the realities that exist in the market. And forming that type of rigid attachment to a certain belief structure is not aligning with the realities that exist in the market. The market is constantly changing. It's dynamic. It's fluid. Something could be incredibly bullish one day and break structure tomorrow. If that happens, we need to be in a position where we can identify that happened. And the problem is that when you have a bias, maybe you have been talking about how bullish the market is for the last few months or whatever. The idea is that the more time you spend identifying with that and solidifying that identification, the more difficult it's going to be to change when you need to change it, right? When you need to flip that bias. Um, so again, the point of this video is just to not identify as either the bull or the bear camp. Let them go at each other and just trade volatility outside, right? Because most of the time, price is just staying within a trading range 70% of the time or so. And so this rigid demand on price to behave a certain way is not really helpful. And I think this is the type of thing where it if you come out and say it and make a video about it, everyone is going to agree with you. Everybody's going to say, yeah, that doesn't make sense. But I think it's a little bit insidious because these type of things, you don't necessarily realize that you're doing them when you're doing them, or at least you don't set out to do them that way, right? You kind of just fall into there, right? And this is, you can see how people get trapped on the wrong side of the market, right? Because say you got into the market during a bull market and you spent a year or so um, with up only price action, well, then you've had a long period of time to solidify that identification, right? And it makes it much more difficult to change when it does happen. And and the flip side is also true, right? If you spent a year in the bear market, that time spent in that bear market is going to solidify that identification with one side of the market. And then when the market changes around, you know, um, those people are generally not going to be able to embrace the change that's happening in the market. And again, it kind of just ties back into, trying to avoid rigid belief structures when you're interacting with the market, right? This type of belief, identifying with a bear or bull camp, it's very egoic, right? It's bringing your ego into the equation, and it's typically uh, one person's ego who identifies as a bull going up against another person's ego who identifies as a bear, and they're duking it out, and neither side is going to win, right? Typically, they'll just further entrench themselves within their already rigid belief systems, and that's just what we want to avoid. For me, particularly, my trading really, really took off when I started to identify as a trading volatility. And by that, I mean that I would look at different price swings and try to trade any volatility within those price swings, right? Without demanding that the volatility be expressed in one direction or the other. Because in reality, the volatility is expressed in both directions all the time, especially when you get down to the lower time frames, right? The lower you narrow your time horizon, the more random volatility is going to be. And another way to express that is that on any given day, right, any trading day, nobody knows which way volatility is going to expand that day. They just don't. I mean, they may say they do, and they may have an edge, but to like definitively say that they know which way volatility is going to expand on any given day is just factually untrue. So kind of embracing an element of randomness into a into a trading model is going to be extremely beneficial over the long term. And the other insidious nature of the bull versus bear mindset is um, that you don't necessarily realize is happening is it can lead you into situations where you end up having a catastrophic loss, right? And lead you into situations where maybe you're doubling down and adding risk in scenarios where you shouldn't be. And people don't exactly set out to do that. It's just that if you approach the market with a rigid mentality, you're going to find yourself in those situations more often than somebody who has a little bit more of a flexible mentality. And anyway, yeah, just the point of this video is just to kind of embrace randomness and not demand that volatility express itself one way or the other, and particularly not to identify with any of these crypto gang traders, bulls or bears. That's all bullshit. um, but I know you guys are a little bit more advanced than that if you're watching these videos. So yeah, make sure if you like this content, just make sure to like the video, subscribe to the channel, and catch you guys in the next one.